So hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Thursday morning, and the cues coming out of global markets are fairly positive. Of course, yesterday when we were speaking in the morning, the cues were extremely negative, and we were staring at a negative open. But this morning, of course, contrasting a picture here. Of course, that's attributable to the kind of rebound we saw on the Lal Street in the second half of the session yesterday. But of course, Wall Street also saw a good rebound, and the GIFT Nifty is hinting at a very positive start for our Indian market as well. And lots of stocks in focus, including the likes of PSUs that were leading from the front yesterday. Vedanta, Paytm, these are some of the stocks that will be in focus, and we'll try and discuss these stocks on the show. And of course, we'll also be taking up all your stock-related queries. So if you have any queries, keep them coming in on our YouTube feed live, and we will try and take them up. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street rebounds after Tuesday's sell-off. Tech-heavy Nasdaq jumps over 1%. Chip maker Nvidia replaces Alphabet as Wall Street's third most valuable company. Meanwhile, Warren Buffett's Berkshire Hathaway trims its stake in Apple. And if you look at the bond markets, treasury yields have fallen after rising to 4.3%. The US dollar also has retreated from 3-month highs. Asian markets open higher following the rebound on Wall Street. Japan's economy unexpectedly slips into a recession, hurt by weak domestic demand. The GIFT Nifty, however, is indicating a positive start for the Indian market. Looks like we are poised to, make a dash at that 22,000 mark as well. Oil prices come off with the Brent slipping over 1% after a rise in US stockpiles. Meanwhile, Bitcoin regains the $1 trillion market cap mark after prices hit $52,000. And among stocks in focus, watch out for Vedanta as reports suggest it may sell stake worth $1 billion to GQG partners. Also watch out for Paytm as the circuit limit is revised to 5% from 10% following the steep fall in share prices. RBI meets heads of public and select private sector banks to highlight issues like liquidity management and digital fraud. Governor says there is no scope for complacency and banks should maintain their vigil around any risk build-up. Let me then bring on board our technical expert for today. Joining me is Kush Bohra, who's the founder of kushbohra.com. Great to have you on the show, Kush. What would you say about yesterday's rebound? It was a stellar rebound with the Nifty, clawing back from a 300 point, clawing back 300 points from day's low, right? Do you think the momentum is likely to sustain today and we can look at levels of 22,000 on the charts once again, given the fact that the GIFT Nifty is also hinting at that?
Hi, Nandita. First of all, very good morning to you and all the viewers, and always a pleasure to be here. Well, in a way, we did call it. It did seem like the Nifty would take support at the 50-day moving average of 21,500, and there was some put base also around that level. And glad to see that that's played out. But that said, broadly, if you see the last month and a half, almost 2 months, the markets have been in that 21,400 to 22,100 kind of range. And we've respected that for most of the part, given the couple of extreme days aside. I think 22,000 is, of course, the level that we're looking at. But this time around, we feel that the market is poised to take that out, even 22,200. I think we're looking at 22,500 as the next level on the index. This could very well happen starting next week. The kind of support that we are seeing come in from a lot of other names. IT was already performing, metal, oil and gas were performing. But the joker in the pack, is the Bank Nifty. After a good 20 sessions, it's closed above the 20 DMA for the first time, hinting that, there is some strength returning to it. So we're looking at a level of 48,000 on the Bank Nifty as well. So things might just be turning around the corner here for, the indices. Both of them might be breaking out of, of their, recent highs and the range that they've been playing for a while now. So getting a little optimistic here on Nifty and Bank Nifty both.
All right, getting a bit optimistic. Let's, hope that the momentum continues today as well. With that, hold that thought. Kush, we'll come back and talk about more stocks, and we'll also be taking up our viewer queries as well. But let me also bring on board Deven Choksey, who's the managing director of DRChoksey FinServ, joining in this morning. Great to have you on the show, Deven. I want to first get in your thoughts on Vedanta, right? Because there is a report that says that Vedanta may be, in fact, promoters are in talks with GQG partners to sell stake worth $1 billion, right? and the stake sale could happen via a block deal. Of course, we saw, what happened after GQG partners picked up stake in Adani, right? It, meant a reversal in fortunes. But Vedanta, of course, is grappling with high debt, and that remains a concern. But this news flow, kind of sends out a message that the promoters are very serious when it comes to paring down their debt, right? What kind of a message does this really give to investors? And if the stake sale really goes through, do you think this would mean a reversal in fortunes for Vedanta as well?
So, good morning, Nandita. I think many questions in one question, I guess. So, let me try and answer some. Well, on one side, the Vedanta is passing through a restructuring program wherein they are demerging respective business units from the consolidated entity into the separate units. Now, given this particular program gaining the momentum and the becoming reality going forward, I think there is going to be some amount of balance sheet challenge, I think, for some time to come. And that's where probably I think you are likely to see the stocks, I think, not performing as much because of this kind of a restructuring process being undertaken. Of course, I think it demands cost. It will halt, I think, the some kind of a expansion activity that otherwise the company would do. All those things would happen. The normal brownfield expansion might happen, but some of the greenfield projects may not happen. That is the challenge that till the time this restructuring gets over. So that issue is there, and we can pass it on one side. The other aspect of the company is that the current challenge is cutting to debt. Now, that debt is likely to come down given the restructuring which is undertaken by the new investor, whoever comes in. I think they may probably put in money. And that's where I think you are to see some breather on that front. So if something which was not working right, I think this one is probably, I think, moving in the right direction. Given the challenge of the uncertainty, probably and the time taken for it, I would think that the recovery would be slightly slow, even if I think the new investor comes. And I mean to say the recovery in the stock price would be slightly slow, even though the new investor comes in. That is a point I think which one can keep in mind. But otherwise, at the current valuation, this company is looking reasonably priced. I'm not saying it is expensive or inexpensive, but it is reasonably priced at this point of time.
Right, that was about Vedanta then. But let's talk about the PSU stocks, right? We saw a heavy sell-off come in, over the last 3 sessions, and most of the analysts, were saying that, that was bound to happen given the way some of these PSU stocks have rallied, right? But, after yesterday's rebound, do you think there is, much of the correction is out of the way? Because, yesterday I was reading a report by Jefferies. They say that the PSU index is still at a 40% discount to Nifty. So that means there could be a lot more room for upside from here. But what are your own thoughts when it comes to PSU valuations?
So my understanding on the PSU businesses, I think they are great businesses, obviously. I think some of the companies would take, if not, I think the century, I think some of more decades, I think, for getting built up and all. These companies are phenomenally well built up over a period of time. Unfortunately, I think these businesses have some challenges in the sense that their growth is packed with the economic growth. And economic growth, I think, when it is 11-12%, the PSU companies probably grow between 12 to 15%. That is where I think one will have to be realistic while estimating the growth for these companies. Nothing wrong with them. The fact remains that I think these companies have their fortunes linked to the economic rate of growth, and that is where I think one will have to be realistic. Second aspect is there is a huge scope of improving the efficiency and profitability in some of the businesses. So they are commodity-driven businesses in many cases. Still, I think there is a huge scope for improvement into the profitability for these businesses. Given that possibility, I think one could well argue that I think sooner than later it may happen. However, for it to happen, in my understanding, the government will have to make one clear commitment to the PSU that they will not be shuffling the management of the PSUs, I think the way in which it has been happening in the past. They will have to allow the management to remain relatively more stable on the job. Then only somebody can perform. If we change people in 2-3 years' time, I think the performance will not come. These are the realizations, I think. But on the other side, the market price, I think, where we are all looking at, the market price are reasonable. If you are not, I think, going too overboard on the assumptions, then possibly I think this current market price and I think any fall there correction therein maybe I think an opportunity to buy at lower levels. But don't try and buy at a significantly elevated levels because it may demand a larger waiting period for you in this businesses.
What are your thoughts on the PSU, oil and gas companies, of course, OMCs, BPCL, HPCL, IOC? Do you think these companies are running ahead of fundamentals? Of course, much of the euphoria could be driven by the fact that, the government didn't really dole out any populist measures in the budget and, in terms of fuel price cut as well. But do you think all this news is already in the price when it comes to the likes of BPCL, HPCL?
So, while I think the current refining and distribution business, I think whatever they have, that is fully priced. What is required to be factored into the price would be the possibility of the green hydrogen, the renewable part of the business, I think, which is coming up next. Now, this is a story for next 5-10 years. It is not going to happen tomorrow. But yes, the progress has already started happening. All these companies, BPCL, HPCL, IOC, ONGC, they all have inherent strength of assuming this new energy segment, which is a green hydrogen segment. And there, I believe that I think the opportunity is going to be very huge as far as I think the country is concerned. Because on one side, you produce the hydrogen using the renewable technology. On the other side, I think you end up supplying the power at a comparatively cheaper cost, I think, to the conventional power which is generated out of the fossil fuel resources. So from that perspective, I think the trend is going to be in favor of green hydrogen eventually, and these companies are well positioned. In my viewpoint, this potential should be kept in mind. Anything other than this at this point of time probably is demanding that you are paying higher amount of market price as a premium for these companies. And that can probably cause some amount of this, I think, some amount of lower return for the investors in this kind of a situation.
Right. Lastly, I want to get in your thoughts on Reliance Industries. Of course, you've been tracking this stock for quite some time, and 20 lakh crore rupee market cap milestone this company has achieved and become the first Indian company to do so, right? On a YTD basis also, the stock has fired up quite a bit. Do you think this year Reliance Industries will take leadership, and what will be the key drivers according to you going forward?
So that is always an interesting proposition. Continuing from where we stopped, I think, in the renewable segment in the earlier discussion, I think Reliance has already moved ahead, and they have already creating a complete ecosystem for producing the green hydrogen. They have the solar panel manufacturing, they have the solar farms in place, they have the port-based presence in Jamnagar. They are basically taking out the water and probably, I think, do the electrolyzer process through a newer technology. So all of those aspects are already in place as far as Reliance is concerned. And I believe that if PSUs are going to be into the renewable segment, green hydrogen segment, in the next 5 to 10 years, Reliance is having already a head start for at least 5 years at this point of time, or even more. So from that perspective, I believe that I think this company is well positioned. 2024 is a year in which the renewable is expected to start gradually into the commercial activities. And that's where probably I think one can argue that I think investing phase for renewables is getting over in 2024. Investing phase for geo platforms and investing phase for Reliance Retail that has already been completed, and there are B2C models which are already successful and growing at the rate of around 20% in both cases. So in my viewpoint, the next figure could be these two companies coming up for the separate listing and creating a new market value for the shareholders of Reliance. And that is where I think the next figure one should be looking out for. Whether it happens sooner or maybe happens next year, I think one will have to calculate that aspect. But this is where I think you see the opportunity in the stock. To me, I think the stock is full of possibilities on every aspect.
All right, full of possibilities in every aspect. That's the thought on Reliance Industries. But with that, Deven, thanks a lot for taking out time and joining in and sharing your insights with us this morning. Appreciate. Well, with that, let me go back to Kush and talk about the stock of the day. NMDC, good numbers. Yesterday we saw profit jump 62%. revenues up 45%, and margins have also, topped expectations at 37% vis-a-vis 30% on a YY basis. NMDC stock yesterday, it was upbeat ahead of numbers. Even though it may have cooled off a bit, but if you look at the 6-month chart, it has nearly doubled. Kush, here on, should one chase momentum when it comes to an NMDC?
But it might seem like chasing momentum given the run-up that we have seen in the last 6 months or so. But if you look at the charts, the correction that we saw in the last 4 or 5 days actually cooled off the stock quite a bit, and we are starting to see a new base formation where the stock has actually taken support at the 20-day moving average and rebounded yesterday. So I think there is a lot of upside from here on. In fact, it's a good idea for a fresh entry as well. However, 250, that's the level where it acts as a psychological resistance also. But 240 and 250 call options have a rather strong base. So maybe in the near term that could act as a bit of a resistance. But even that is some distance away if you look at it from percentage return perspective. So for a fresh entry, if the stock does not open, let's say above or close to 250, then this does warrant a fresh entry. But once that level is taken out on a positional basis, the stock could see moves up to 275 also. From the near-term perspective, the 20-day moving average of 225 will act as a support zone.
All right, then 250 is a crucial level to watch out for on NMDC. But let's quickly address the brokerage call of the day before we start taking up our viewer queries. It's on M&M, which reported numbers yesterday. Although numbers were a beat, but tractor segment remains an issue, right? And if you look at the brokerage views, they've also flagged off the fact that, until and unless there is some bit of visibility on tractor demand, returns won't be as great. But let's take a look at what CLSA has to say. It has a buy rating rather. Target price raised to 2074. In fact, it's a strong growth in the SUV segment that has driven the performance for M&M. That's what CLSA has said. But tractor volumes are likely to decline by 5 to 6% in FY24. Even the management has, given a very cautious outlook when it comes to the tractor segment, right? But, if you look at the stock, and compare it with giants like Maruti and Tata Motors, the stock has clearly underperformed on a YTD basis. Here on, when you look at the chart setup for M&M, what do you really spot? Do you think it warrants a look right now, or do you think better to look at leaders like Tata Motors?
So on the technical setup, Tata Motors definitely has a leg up over Mahindra and Mahindra. There is definitely traction there. There is definitely momentum. So if someone's looking at it from a trading perspective for momentum reasons, then definitely Tata Motors has a leg up, as I said. But Mahindra and Mahindra also. Let's not forget that the stock was actually one of the rank outperformers, last year, where from March onwards, the stock from about 1,000 levels had gone all the way up to about 1,700, so about 60-70% kind of jump on a big name like Mahindra and Mahindra. So after that, a few weeks of consolidation is absolutely warranted. Now, if you're looking at this from a positional standpoint as an investment, it's not a bad idea to start accumulating this, because the stock's actually taken quite a good support around the 1,600, 1,620 levels for the last 4 to 5 weeks now. And it's consolidating with a mild positive bias. So from a positional standpoint, I think this is a good time to start accumulating. 1,800 and 1,950 are the positional targets on this one. But as we just discussed, from a momentum perspective, Tata Motors looks slightly better.
All right, that's the view on, the auto pack per se. But let's start taking up some viewer queries. Quite a few coming in this morning, Kush, and most of them on PSU stocks. So let me first get in a query on REC. This one is coming in from Prabhu, and he wants to know whether or not it is the right time to look at REC. As I mentioned at the start of the show, 3 days of, correction in the PSU pack, and REC, PFC weren't spared either, right? If you look at the 5-day moves, 7% down, but yesterday it staged a good comeback. Do you think now is the time to buy, or do you think there could be corrective phases coming in, and that is when one should look at it?
Nandita, I'll take a quick 30 seconds just to make a quick word on the PSU packs. Believe me, 3 days of 3 days of profit booking, sharp fall, and everyone started questioning whether the PSU rally is over, whether this was a wrong bet to make. This is how bull market corrections work. They are sharp, they are swift, and then you see, the return and the bounce back. For me, what happened in the last 3-4 days is precisely that. The story is not over. There's still a long, long way to go in these names. These corrections should be used as as an entry opportunity. If you see, REC has actually again rebounded very smartly. It's closed above the 20-day moving average. For all the overheating and all the overbuying signals that were there, they just got cooled off in the in those 3 days of fall. I think this is a good entry point. If you've got an existing position, hold on. If not, then you can enter for targets of 500, and once that is taken out, 525 is the next level. A strong support zone comes in at around 470 odd levels, where the stock's making a base.
Right. Would you say the same about SJVN? Very good recovery yesterday, double digit. In fact, I think 12% up yesterday. And we have a query on this stock as well from Vani. And she's saying that she's bought it at 114, making profit but marginally so. Do you think she should wait it out and, wait for more profits before, in fact, wait for higher levels before looking at profit booking?
I think, Nandita, the pain is because about 5 days ago, the stock was at 160 and probably she did book her profits out. I think that's where the pain is coming from. But there's an old adage, right, which is higher they go, harder they fall. The rally in SJVN in particular was, far too fast. But this correction was actually bound to happen. On an RSI, the stock was actually above, 80, 85 kind of zone. So it's a good thing that she bought it at a good entry price, which means despite the fall and the mild recovery that we saw, she's still in a profit. My suggestion is hold on, keep a trailing stop loss at your buying price now, which is 114. If it slips further, maybe we can look at re-entry again at some other level. But for now, hold on to this one with your buying price as the trailing stop loss. The stock has seen momentum. The last 2 days have seen sharp volume pickup and a positive price action. I think 135, and once that is taken out, 150 are the next level that you should look at, this stock positionally.
All right, that's the call then. Hold on. Hope that answers your query. The next query is coming in on an LNT from Shashikant, and he's pointing out that despite the announcements in budget, the stock hasn't done well. It's not been performing. It has fallen, and if you look at the 1 month chart, it is giving negative returns, right? Even the YTD charts. But do you see a trend reversal on the charts of LNT? Because of course last year, in fact over the last 1 year, it has given a good solid 50% return. But right now, this year so far, it hasn't really fired up. So is there, are the charts looking weak here?
So Nandita, as you just said, 50% return on a big stock like LNT is phenomenal. Consolidation is warranted. Now it's a question of time frame. Again, if you're looking at this as an investment stock, these dips should be used to buy. But from a trading perspective, no, there isn't any indication that the stock is due a reversal. In fact, there is a gap at 3,200, which the stock could well fill in this current downturn. So if you're looking at it from a trading perspective, it's an avoid. But if you've got an existing position from an investment perspective, hold on, not an issue at all.
All right, that's the call then on an LNT. Quickly, next query is coming in on a Vaman Textiles. Tapan has written in and he wants to know what to do with his holding. He's holding 200 shares at the price of 433. Right now it's at 441. What would you advise him to do here, Kush?
Hold with a trailing stop loss of your buying price. The only risk here is that the stock is volatile. If I look at it across time frames, the stock is in an uptrend, but the volatility could be something that could be a bit of a discomfort. If the stock does hold up above his buying price from here on, there's a very good possibility that the stock could touch 460 and then 480 kind of levels. So, the volatility aside, the trend on the stock from the near-term perspective looks upwards.
All right, the trend here looks upwards. Hope that answers your query. Maheshwar Bhanu wants to know your thoughts on a Cleanscience. This stock has been a little volatile and hasn't been doing all that well. Any thoughts here, Cleanscience?
For now, it's an avoid. The entire pack was supposed to be, one of the best performers of the year. Hasn't turned out to be so far, at least. And the stock's been, under a bit of pressure with no real signs of recovery. So for now, Cleanscience is an avoid.
All right, Cleanscience is an avoid. But I think just coming to the last query of the day, it's on a Tata Steel, and Aman Jain wants to know your thoughts on this stock. What are the kind of levels one really should be watching out for on Tata Steel? Yesterday it was fairly upbeat, 2%, and that too on a day, I think, day before yesterday, I think metals had corrected, but saw a good rebound yesterday. So here on, what are the levels you'll be watching out for? It's close to 52-week highs any which ways.
Correct. And, the setup looks positive here. The levels that I'm watching for are 137 on the downside, which will act as a good support zone. Even in the recent downturn, the stock really didn't break it on a closing basis at least. So 137 on the downside. Once that is held, we are looking at a comfortable move to 145 and then 152 kind of levels on the upside. on the whole, fairly bullish on Tata Steel.
All right, fairly bullish on Tata Steel. That's the view then. And this brings us to the end of the query segment. But Kush, what would you be recommending for our viewers this morning? As we are heading into the weekend, of course, one more session to go before that. But with a perspective of 1 to 2 weeks, anything that's catching your attention on the charts?
Sure, a couple of them. And as a disclaimer, we've shared these calls as a part of our advisory service as well. One of them is Indian Hotels. The stock has seen, a fair bit of uptrend. All the dips that we are seeing are turning out to be buying opportunities. The last couple of days have been a bit of a consolidation, but we think the major trend on this one is intact and it's on upwards. 540, 555 are the positional targets that we're looking at. 515 is a good support zone, so that should act as your stop loss. The other name from the banking space, let's discuss stock, which is Union Bank. We discussed this the last couple of times, a couple of weeks ago. For targets of 150, those were achieved, and it came in that firing line of the PSU profit booking rally. The stocks again starting to rebound yesterday. We saw some signs of green shoot. From a near-term perspective, 142 and 145 are the targets that we're looking at, and 136 is where I would place my stop loss.
All right, these are the two recommendations coming in from Kush. But Kush, before I let you go, I want to get in your thoughts on Paytm. I mean, there's been a revision in filter from circuit filter from 10% to 5%. The stock has, of course, I mean, I don't need to say it's come down nearly 500% from its issue price of 2150, right? So here on, on the lower side, how much can it really fall?
I think $1 billion question, isn't it? But just to answer this on a lighter note, Paytm mat karo. Correct. The stock's fallen. Yeah. There is consensus on the street from a technical and a fundamental standpoint as well. Unless there's clarity on the business, I think it's a very clear avoid. We'll see when there's base formation, and if at all the stock starts to recover from, let's say, about 300 to 75 odd levels. But for now, Paytm mat karo.
Right, that's the consensus view then on the street, Paytm mat karo. But with that, Kush, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure chatting with you in the morning.
Likewise, Nandita, likewise.
Thanks a lot. Well, with that, we've come to the end of this edition of Morning Trade. But of course, have a good trading day from me and the entire team. Thanks a lot for tuning in. Stay tuned because lots lined up on the other side as well.